All right, everybody. So let's go over what happened today in the ES and in crude, and basically just continue our springs and upthrusts work. All right. So take a look at the hourly chart. You can use the hourly or the 3 or 4 hours chart, which is probably better. But for right now, the ranges are very small. They're not that big on the ES, and that's a problem. So you have small ranges, and the movement is not favorable for trend trading, at least intraday. From what I'm seeing, it's quite small movement or consolidation movement. So you just have to be careful and not expect large moves. So let me just show you what I was doing. So this was in the morning. In the morning, what I noted was this red bar breaking this low, right? So, and the spring failure from yesterday leading to the break. So I'm expecting lower lows because the spring attempt yesterday, which I showed, failed. So today, and after it failed, it was a break. So typically that's a bad sign. It means that the market wants to go lower. So if it wants to go lower, we looking for upthrust. So the level that I wanted to use was, you see this high, the high of the spring that failed? Took from that high, I think it was there, I don't remember, but yeah, it was there. So from that high to that high, and price was going towards that level. So it went to that level and upthrusted it. This high is 45.78. This high is 45.78.25. Can you believe it? A quarter of a point. So as soon as it went there, what happened? A very ugly selling situation. As you can see here, you had your change of behavior, or the selling or responsive selling, or a sign of weakness, whatever you want to call it. So as it tapped that level, see that level? It cleared whatever it wanted to clear, and this is the selling. So once that selling came, I wanted to get in, and got in around here for a move, but it was a very small move because, as I said, the ranges, they're not too good right now. The ranges are small, so this is very important for profit taking. All right, so this was the upthrust selling. That's the pullback. Pullback goes to this break, not break, the low before that high, right? So that's your ICE. And after that, it started just grinding, grinding and going lower. So I want to target, and obviously I'm not going to target this low. There's nothing to be made, but this low right here, which was the original spring, is where the market went to. I thought I was going to go lower, but then I realized, oh shit, the ranges are small, and there was a lot of difficulty in the movement. So that means the selling is not aggressive. So it literally went from an upthrust position, selling the upthrust, to exiting on the spring. And amazingly, guess what happened? On the spring of this area, you have responsive buying. That created that rally. I don't know why I didn't get the pullback, but I should have. And as soon as it tagged it, boom, you have your pop. So it just popped. Again, these are not big moves because it's small ranges. But what happened is the market is in a spring position here, shortening the thrust, boom, buying, buy the pullback, get in the pullback, and ride it up. Now here's the funny part. Again, it goes to the same area of that prior high and puts itself in an upthrust position. Isn't that crazy? It's going from upthrust of this I don't know what the hell. Up this high gets upthrusted to this low gets sprung to that high getting upthrusted. So it's a funny movement, but I knew, so I basically have to exit around here because the market's movement was very sluggish over here. And so what you want to do, and I know there's a lot of lines, let me just delete all this stuff. Any levels that have already been, used, just get out. Just delete them. So how one thing to do is if you draw a channel and you notice that when you draw the channel, the market as it's going lower is away from the bottom line. As it's going lower, it's staying away from the bottom trend line of the trend channel, which means the thrusts are shortening. As the thrusts are shortening, chances for a reversal are quite high. Remember that, all right? If it accelerated and broke through this trend line with authority, meaning just went straight down, that's also a time to get out. There's 2 times to get out when you're examining a position. There are 2 times to get out. One is on the shortening of the thrust, which will be indicated by the lows going further and further away from the bottom line here in a down channel. And the second is when it overshoots or accelerates and it gets severely oversold. So in either case, the shortening of the thrust, which is lack of momentum situation, or in the oversold, really oversold, meaning acceleration, hypodermic maneuver or climactic maneuver, both are indications to think about shutting down your trade. Now, good thing about and both of them, when they're followed by this type of behavior, it's typically a change of behavior, meaning you have a SOT away from the bottom line, the thrust is shortening, this shortening of thrust, which leads to this change of behavior rally, which sets up the pullback to get the pop. Or if it accelerated and overshot, the climax automatic rally, secondary test, the automatic rally is your change of behavior. So both situations can yield change of behavior. Anyway, so when you're in a position, remember to use your channels and observe what's going on. All right, now we'll take a look at crude. Crude, unbelievable. Like, again, you just have to prepare for it in advance. Where was I? This, no, here. Yeah, this high, right? So just drew the line here. It got retested right here. All right, so this high, I just drew the line. It gets retested right here. Sometimes this happens like this where you have an exact test. So this high is 79.60 and the test is exactly 79.60. It's not an upthrust, but it's an exact test. From that test, we have a selling wave, biggest in the last 4 waves, right? Pulls back, and look at this sell-off. And then it tried to spring, but obviously not to get into it. Although it's actually holding. But I know not to get into it, even though it's a big up wave, but relatively speaking, there's so much selling here that I just don't want to mess with it. So it basically went from a test. If it went one tick higher, it would have been up thrust to a spring position. But obviously I'm not going to take this spring because, as you can see, this low gets sprung right here, right? But I'm not going to take it because the selling waves are too strong. Look at this bar. So the selling waves are too strong, and it's not a pullback. It's just going all the way down to support and bouncing a little bit with a little bit of strength because it's a pullback, and that's showing spring-like behavior. But it's not like a rally pullback spring. It's more like rally and then the down rally, which breaks, completely breaks, and at the spring is setting up a pullback. But that pullback, in my opinion, is probably better for a short. So I'll be looking for sell opportunities up here. All right. So this is exactly what that book, David's book, this is what he's doing. This is what he would do. This what I'm doing here is coming right from David's book about drawing lines and seeing, in that area where the lines are, where the springs and upthrusts are, and then just executing the entries, what I'm doing a little bit differently. And then what I'm looking for is just heavy buying or heavy selling, which helps me confirm the spring or upthrust. And that's about it. But the ideas here are all in his book. The key chapters you want to read is the where to find trades. After you read where to find trades, read the chapter on springs, then read the chapter on upthrusts. I don't think anything else is really required from that book, unless you want to read a bar by bar and all of that. I don't want to read bars throughout the day, like, oh, this bar, that bar, and that's, to me, it doesn't make sense to do all that bar by bar, because I'm only looking at the edges, which he says, which is trading at the edges. So why would I read all the bars with so many bars are in the middle of the range? They don't mean shit. It's better just to wait for prices to hit the edge and look for fish, like he used to say, like fishing at the edge of a creek or something like that. Trades are like fish at the edges. All right, so that's what we're doing, and in this way, you can actually trade multiple markets. So if you read bar by bar, you're stuck reading one chart, and I think it's a lot of wasted resources, of mental and psychological resources, when you can just wait for for price to tap the line. And in that case, you can actually start trading multiple markets. I don't just trade the ES, like you could trade the ES, crude, and start adding other markets as well. Anyway, thank you. Have a good day. Bye.